Hi, and welcome to Sunday Night Charts, where we take a look at charts to help you with the trading week ahead. I'm your host, Steve Van Meter. Let's get right into what are nothing short of euphoric markets with trends, as we'll talk about on Monday's macro show, at record highs in euphoria. I mean, who would have thought in the middle of a recession, in the middle of the biggest pandemic since the Spanish flu, that investors would be euphoric? But trend indicators for us today: short term is a 9-day, intermediate term 21, long term 50, ultra long term 100. Let's take a look at the moving averages. Colors that you will see on my screen: 50 days green, 100 days blue, 200 day is in tan. Price versus momentum. Price is a general direction prices are headed. Generally very easy for most investors to figure out. Momentum is the rate of change. Now, a bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break. Support is a level sellers can't break. Or resistance is where sellers are at and support is where buyers are at. Technical analysis does not predict prices, even though many people think it does. It can be used to determine the risk of a trade, help with time and trade, and provide the direction to the path of least resistance. Charting offers possibilities, not probabilities, and definitely not certainties. Let's get into the S&P 500. Now, you will expect there won't be too many changes because the market was bullish last week from the week before. And so looking at the S&P 500 now on an annual momentum scale, we see short-term and intermediate term. Now they've flipped bullish only on the ultra long term, and likely if the S&P continues at its current pace, this will flip sooner. As far as our shorter term momentum screens, all green, no surprise. Let's take a look at the chart as the S&P continues to grind higher, without any sign of slowing down. I mean, and that's the real key. Investors are super euphoric. We have fourth quarter earnings seasons coming up pretty soon. Investors don't care. They see stimulus as highly profitable for companies, even though it probably won't be, and so far hasn't been. That doesn't matter. That's what people believe, is that stimulus is the answer to all our problems. Really no technical things to do here. This thing is just off the charts. Let's take a look at the Nasdaq. And what do we see here? No change over last week. So the short and intermediate term are still bearish on annual momentum, and as is the ultra long term. Everything else looks green. Let's see what's going on with the Nasdaq. Now, we should expect, based on momentum, to see a slightly different picture. And even though we don't see it in the price of NASDAQ, what it's telling us is this trend is slowing down. And that's probably the real key here, is the trend is slowing down. And that's all momentum is doing, is saying, look, these moves in price are waning. Doesn't mean you can't kick up speed next week. It just says so far the trend is slowing down. One that almost needs no explanation is a Russell 2000. Everybody, again, due to stimulus, thinks that this is going to send corporate profits all the way to the moon and farther because, well, people keep bidding up small caps on any mention of stimulus. Meanwhile, a lot of businesses are still failing. A lot of businesses are still struggling, and stimulus is not going to save them. Earnings season might be a big eye-opener for people who own U.S. small caps. It's just a matter of how much they've overpaid for stocks, and that seems to be of no concern to people, of overpaying. I bet many businesses wish they had customers that would come in and just willingly overpay for stuff. I know car dealers would love that. I know a lot of small businesses just wish people would just come in and throw money at them. And that's what the stock market looks like right now. How about the energy sector? Now, here's something we can really kind of get interested in potentially, is either a breakout or a fake out coming in the XLE. Annual momentum's now all bullish, other than the intermediate term on price, which is just short term, or intermediate term is bearish. Everything else now bullish. Bullish screens across the board. But is that really telling us the whole truth? From a technical picture, you can see XLE is running into resistance right around this $42 price, where it's run into resistance before. It's had a gap up move and a reversal back in June, and then it tagged that same overhead resistance in December. It's revisiting it again. Now, one way, as we've talked about, is you can see a trend starting as across to the 50-day and then a tag against the 50-day. Now, what's constructive here is the 200-day moving average is rising, the 50-day is rising, and the 100-day is close. Starting, maybe it's hard to tell, but it's flattish, but it's going to trend up based on what we're seeing here. So from a price perspective, what could happen? Could this go sideways until the 50-day comes up and acts as a level of support and pushes it higher? Yes. Can price come down and confirm against the 50-day? Sure, can do that. What you're really watching for is if this breaks through below the 50-day, that kind of would tell you that this change in price is not going to hold. Or if it comes up and tags a 50-day and then doesn't move and break out, that's what you would be looking for from a technical perspective. Let's take a look at financials, all bullish. Now, this is really interesting because everybody now thinks that there's 20 million people unemployed getting stimulus checks that are going to go to the bank and borrow money, when we know for a fact that banks don't want to borrow money. And now you have price of bank stocks sitting right near all-time highs. Well, I don't think, no, I should take that back. Is that all-time highs? Yep. How about that? Right near the same spot. You know, this is worthy of a line, I think. What do you think? Should we draw a line here? Let's do that. That would be fun. Let's go back to the prior all-time highs. Let's zoom in and see what's going on here. Just see how close is this. So we've got a high, let's see, what do we have? 30.98. Okay. Well, how about that? 2 cents off. That's pretty good. So now let's see, where are we at right now? So bank stocks are sitting just shy of their 2008 all-time high, right back where they were, not at their current, just shy of their current all-time high here, set back in February before bank stocks melted down. That, my friends, could be a pretty ominous signal, and that you didn't get to see any of it because I didn't switch my screens over. So here, let's go back and look at that again. Drew the line in. You can see back here the great financial crisis. Here's the peak in the XLF. And here you have it right here, just sitting shy of its great financial crisis peak and right back below its all-time high. If you want to look at a market that may be potentially extended, considering, like I said, banks aren't lending, we know that for a fact. There you go. So sorry about that goof. We'll see if we can fix that straight out here going forward. And momentum, all bearish on the XLU price. Short-term flip bullish, ultra-long-term still bullish, everything in the middle bearish. What you can't see here is 12-month momentum. Now, these ones on the bottom use a slightly different formula than this annual momentum here. It is turned red, and that means on a 12-month basis, momentum is red. And what that means, usually for a security, it means the worst is coming. So we have price now below its 12-month period. You can see back here, price is going to keep rising. So in order to fix its annual momentum, price needs to get up. Otherwise, this is a bearish indicator for utility stocks. Absolutely bearish. And when annual momentum trends break, rarely do they reverse without a big drop in price. How about industrial stocks? We've already looked at the major indices, so we should expect to see nothing but bullish here. Pretty much we've got that almost across the board, and we know that industrial stocks, everybody is bullish on stimulus. 20 million people unemployed, but it doesn't matter. It's going to make corporate profits sing. Not sure how that's going to happen, since 3/4 of all stimulus checks go where? If you watch the macro show, you already know it goes to pay off credit card debt and other debt. How about large gold miners? Kind of interesting price action this week, and let's take a look. We got, remember this was all bearish, and now we've got price is bullish through the long term, and any momentum is bullish in the short intermediate term. Everything else is green. Let's take a look at where GDX is at, because GDX is now back below its 50-day moving average. I know everyone was excited last week, boom, when this thing shot above its 50-day moving average gap up, overnight move, and then nothing against this, just ran right into the 100-day moving average, couldn't get through it, and then big, another gap down, closed right under its 50-day moving average. Again, this kind of tells you the trend is bearish. Now, one thing that a lot of people don't realize, and I meant to do this on a prior chart show, and I didn't, is that gold mining stocks are generally highly correlated with Treasury bonds. So you go like, wait a minute, I would never buy a Treasury bond. Buying GDX, you own the same kind of proxy to U.S. Treasury bonds. How about that? Look at those two charts. Now, this, you say, well, wait a minute. If that means interest rates are going up and bond prices are going down and gold stocks are going down, then you look like a fool with your thesis. Glad Glad you said that. Let's go back to 2008. Where is it? And here you see gold mining stocks went down, bond prices went up. Told you there was a major problem in the economy. This is what we're looking for, is while these two generally follow each other around, it's when bond prices start to rally against falling gold mining stocks prices that there is a structural problem in the system. And that's what I'm expecting to happen, as obviously many of you know. Emerging markets, well, how could you be more bullish if you're not bullish on EEM? This thing is pretty much sitting at its all-time price highs, kind of like XLF with green filtering all over my screen. Let's take a look here. EEM, and I moved this line up before we started the show. And let's go look at the max weekly. Look at that. Boom. Fingertips away, right from its all-time high, set again right before things started to go wrong in the great financial crisis. So here we have everybody is super bulled up. You really can't say that people aren't more bullish than they are now because, well, the charts certainly say they're really bullish. But what they're not bullish on is, of course, long-term bonds. But I am, and I still think we'll see that dislocation between gold mining stocks and the long bond. And I want you to keep that in mind. Just think about that, maybe in the next week, what's going on there? Because if I'm right, you kind of see the setup of what is to come. So, of course, no surprise, price is bearish and momentum is bearish. Here, the 12-month one is still green. The 3-month is green. 6 months is red. 9 months is red. No, wait a minute, Steve. How is it possible that this 3-month can be green, the 6 and 9 month can be red? That's because the way this formula behind this momentum says is you can be negative on momentum on the bottom here. But if the momentum is getting less negative, that is actually a positive sign. So the 3-month is actually getting less negative, whereas the 6 and 9 month are getting more negative. It's really only a concern when the 12-month momentum breaks. And the other problem with that is the Fed's still buying. I think people think that there's all this infinite selling that can happen in the bond market. The only infinite thing is going to happen is the Fed is going to buy bonds until they get their desired result. If you want to fight the Fed perpetually, you can, but they will win. They have more power than all the sellers combined. And so what happened after the night of the Georgia elections, we saw on the Friday show, and hopefully we'll get some COT charts from, or I'll source them from where I need to. We see a gap down move as everyone went piled in on the short side right before the election, and gap down move. Looked like we had a bunch of stopping volume here as we covered on the macro show. And of course, sellers said, no, that's not good enough. CTAs, who were, we talked about on Friday show, continue selling. And now we see what is starting to look like a bottom. And for those who love trend lines, here is the rising trend line. I'll make this a little bit darker so you can see it. Here's the rising trend line going back, well, a long ways. So you can see this is the upward trend line of TLT. Hasn't really broken that. Now let's look at yields, because I think we get a little bit better picture of what's going on here looking at Treasury yields. This is the technical breakout everybody's been waiting for. Aha, this means now the 30-year is going to go 5, 6, 20%. Who knows how high? That's what this means. Everyone is super excited about it. But here's the problem with this technical breakout. See how it's fading? See how this price action is slowing down? Yeah, it's still going up, but the rate of that move is really slow. Let me show you what happened 4 years ago, thereabouts. Well, that's not 4 years ago. Way too far. Here, presidential election. All right, remember gap up. This is what you want to see on a big gap up move is gap up move, boom, price up, price up, price up, price up, price up, price up. I know this is yields up, but you get it. We're looking at the chart. So you see this big move up. What you don't want is something like this where you get a gap up and then it starts to run out of steam. That's what we're seeing, at least so far. Will be interesting to see what the Sunday futures market brings. High yield bonds, no surprise, they're bullish. This is a indication that people are willing to pay for risk to get yield. And they believe that the risk they're taking, where there are high yields, is worth it. They said, hey, look, the risks are really low here, and I'll pay. I'll take it. And you can see, no surprise, high yield bonds are getting back near, I don't think this is their all-time high. No, way back before a great financial crisis. But what you see is they are back near their highs. from the past, say, 4 years, 3 to 4 years now, getting back up there. And as I like to look at, what yield people are getting. Well, they're getting a sub 5% yield for taking massive amounts of risk in something that the Fed had to buy to take the risk off the table. But keep in mind, Fed ain't buying no more. Those powers are gone. How about gold futures? We already looked at GDX, so shouldn't see much of a change here. Price on gold has gotten a little more bullish through the long term. Any momentum on the short term has flipped to the green. What's going on with gold? And there, whoa, big move down. Again, this shouldn't be a surprise because gold and the long bond are very similar. I know people are like, man, you really think about it. If you're bullish on gold, you're bullish on the long bond. I mean, that's kind of wild. A lot of people wouldn't even think about that. But the weird thing is you learn on today's chart show is that, yes, if you're bullish on gold, you're bullish on the long bond. And now it's back below its 50-day moving average, most likely going to revisit its support area here between 1800 and 1820. Kind of baffles me that people can be bullish on gold and not bullish on the long bond at the same time. Silver, no change, mostly bullish across the board. And let's see if we have a similar picture in silver, which I did not look at once last week. And yeah, you have the big puking price move. Okay, again, if you're bullish on silver, you're bullish on interest rates going down. Wow, how about that? So silver did get up here. Remember I said it would need to get up in here. This is where its major level of resistance was in this 27 price range, 28, somewhere right in there. It gets up there and got hard rejected. Now where is support? Well, kind of right where this candlestick ends, you can see somewhere between this $24, $25 price range, lots of support here in silver. And let's get to everybody's favorite thing to hate other than bonds, the dollar. And yes, it is red. I mean, you got 3, 6, 9 month. I think the 12 month is red too. I didn't bother looking because it really is so ugly in the dollar that, I mean, wow. So what's going on with DXY? It's looking like it's trying to find some support here. Now, this isn't a surprise. This is a mid-level point of a broad channel. So maybe those are your dollar bearish. This is not really a big deal. Can it easily get back up here to say $90 and say 50 cents, 40 cents and get rejected there and go back all the way down and touch the bottom of this support zone at 88.61? Oh, absolutely. Absolutely. That is not off the table. It shouldn't be considered off the table because you can see it can come in. And here's a good example. It came down to the bottom, but there are cases where it will come down to the mid-level, go up, and then come back lower. So if you're bearish on the dollar, it really isn't a big deal. If you're bullish on the dollar, like I am, well, and a small number of other people, you really want to see this thing pick up steam, but it's going to be a while. I mean, in order for really to see some significant changes in momentum, the dollar's got to get up to 92. And believe me, it's going to face sellers right there because if it gets out of this lower channel here, that's a massive overhead resistance right there. So it'll be interesting to see what can happen with the dollar going into next week. Will it holla or will it get beaten back down as everyone tries to push equity prices to new all-time highs? Well, or continue to push them to new all-time highs. I don't know. We'll find out. Thanks for watching. Thanks for being fans, and I'll see you on the Macro Show on Monday. The content of this video is provides education and information. Is not intended to provide investment or other advice. This is not to be construed as recommendation or solicitation by selling security, financial instrument, or participate in particular trading strategy. This video was prepared by Stephen Van Meter, person capacity opinions expressed in this video that do not reflect the view of Alice Financial Advising or Stephen Van Meter Financial.